In this weekend video, I'm going to just take a look at some of the longer term charts. This is a monthly chart. You can see the first stage of the bull market. For the most part, price stayed above that 20-month moving average. That was a sign that the gold, or I guess this is the miners, the XAU was in a bull market. Once it dropped below it and lost that 20-month moving average in 2008, as we spiraled down into the deflationary recession, price lost the 20-month moving average. Moving average turned down, entered a bear market. Once we regained it, the moving average turned up. Next leg up in the bull market, second phase of the bull market. Again, price loses that 20-month moving average. It is not able to regain it all the way down. That was pretty stiff resistance on the way down. Price was never able to regain that moving average until we formed a bottom beginning of last year, and price shot right up through that and has turned the moving average back up. You can see during the correction here we came right down to tag it and then bounced strongly off that rising average. And I'll say again, we saw the sentiment 4 weeks ago, extremely bearish. Everybody's bearish. Everybody is looking for a retest or new lows. And when you back up and actually look at the longer term market, I mean, you can look at this and see that there was no chance of us ever getting even vaguely close to those 2015 lows. This is not a bear market. This is not a bear market rally. This is a first leg up in a bull market. We've come down. We've tested this average, and it's holding on the upside, just like it held on the downside in the bear market. I'll shrink this down a little bit. So you can see for the barring something drastic happening over the last couple weeks of the month here, the mining stocks are going to complete a weekly swing for the first time since August of this year, when this leg down began. We've now got a monthly swing forming. Pretty good sign that the bull market is resuming. And this is a weekly chart. This is the 100-week moving average. This is the 50-week moving average. You can see we've got a golden cross where the 50 has moved above the 200. Both averages are now moving higher. That is another. Also, as of today, the XAU. This is the third week in a row it has closed back above that sharply rising 50-week moving average. That's a pretty good sign. And here's a longer term look at the 150-week moving averages. You can see the golden cross and the death cross has been pretty accurate in signaling bull market and bear market moves. Much more accurate on the weekly charts than they are on the dailies. I've noted before the death cross and the golden cross on the daily level aren't very accurate. More often than not, a death cross on a daily chart just signals that you're at the bottom of a correction and about to start the next move up. But on the weekly charts, a much longer term time frame, these have been pretty accurate. So we got the death cross up here in 2012, and that was accurate in signaling the beginning of a bear market. We've got a strong golden cross right now, and I think this is also going to be accurate in signaling that the bull market is resuming. And the final chart here is I just want to look at the volume. And this isn't even the triple leveraged fund. This is just a GDXJ, just the junior mining ETF. And you can see as we approached this bottoming level here around $20, volume just went absolutely through the roof and has just expanded massively compared to the prior 4 years. A sure sign that we are putting in a bear market bottom, and this is smart money scooping up shares like mad from retail traders and hedge funds that are on the wrong side of the market, that are selling at the bottom. A 5-year bear market, and these people are, for lack of a better term, they're just stupid. They keep selling after a 5-year bear market, after junior miners have lost almost 90% of their value. Smart money recognizes that there's no downside risk left, and so they're buying massively, accumulating huge shares in preparation for the next bull market, while dumb money is selling here at the bottom. And again, like I said, you can see as we moved through this correction, the dumb money traders, again, just assuming that this was a bear market rally and that the bear market is going to resume, just stupid. And, if you look at a long-term chart here, you can see, there was no risk at all of the miners ever going back down and testing this bear market bottom. We weren't even close. And now we've started the next move up, and we've already had a massive move off this bottom, over 25%, if I'm not mistaken. And the vast majority of traders are still looking for the market to roll over and head down, and these people never look at these long-term charts, so they're still stuck in this mentality here of this 5-year bear market, assuming that it's just going to have another 5 years to this bear market, and it's just not. This bear market is over. It was done last year. We've started the first leg up. That leg was very powerful, needed a correction. We got a nice correction, and it was even exacerbated a little bit by the election night shenanigans in the stock market that pushed the dollar, gave the dollar a little shot of adrenaline, and pushed it up a little further than it probably would have gone naturally, and that put a little extra pressure on the metals. So this probably dragged out a little bit farther than it probably would have naturally, but still, the correction has done what it needed to do. It needed to clear out all of this bullish sentiment that had been generated by this massive move off this bear market bottom, and we now have set the stage for the next leg up.